Hey Borough Bros, I hope you're having a great day today. It is me, your Murfreesboro, Tennessee real estate Sherpa, and I want to just take a few minutes today to talk about inflation and the housing market and interest rates and keeping it all in perspective. So let's talk about that for a minute. A lot of people think that as the Federal Reserve raises interest rates, that directly causes mortgage rates to go up, and that's actually not true. It does have an impact. But what's really causing mortgage interest rates to go up right now is inflation. So all of the Fed's moves lately have been designed to try and get inflation under control, get it lowered. So they've been having some success, but not the success that they want. But here's how it works. As that inflation goes up, you'll notice that the cost of lots of things are going up as well. You're paying more for food, you're paying more for gas, you're paying more for services, and going up along with everything else is interest rates. As the Fed works to get inflation under control, that will be what determines whether or not interest rates rise or fall. Lawrence Yun is the chief economist for the National Association of Realtors, and he says mortgage rates are likely to descend lower later in the year as the consumer price inflation calms down. So Lawrence Yun seems to believe that interest rates will be coming down because he expects inflation to come down. Let's also look at Mike Fratantoni. He is the chief economist for the Mortgage Bankers Association. And he says, we continue to expect that mortgage rates will drift down over the course of the year as the economy slows. So there's no way to be certain if mortgage rates will go down. There's no way to be certain if inflation will be brought under control. But the top economists in that sector seem to believe that interest rates are going to come down as the year goes by. But regardless of whether they come down or whether they go up, I want to show you two charts. Take a look at this one right here. So you can see that this is the historical mortgage rate for a 30-year fixed rate mortgage. So that the red line is the low for the year, the gray line is the high for the year, and the blue line is the average, and the numbers on there are the average. You can see that in the last few years, the mortgage rates have climbed sharply, but it's all about perspective. Let's look at the whole chart, which shows everything from 1971 all the way to 2023. You can see that mortgage interest rates on the 30-year fixed rate mortgage have ranged from a low of 2.65, which was just recently, all the way up to 18.63% back in the 1980s. So the average rate over that entire time of that chart, which is 52 years, is 7.75%. So when you look at it in perspective, you can see that historically our rates are right around average, actually a little below average. So the key to this is I want you to think of interest rates not in terms of where they were recently and how high they are now, but in terms of finding a house that you can afford, where you can afford that monthly payment, because by owning a house, that is the single best way to build wealth in America today. And now it's time for a completely unrelated fact that may only interest me. Did you know that the oldest living land animal is a tortoise named Jonathan, who was born in 1832? As you were. Property values are going up regularly. Over the last 20 years in Middle Tennessee, they have gone up an average of 5.6% per year. So what that means is if you have a $400,000 house, every year the value of that house is going up a little over $20,000 on average. Now in the last few years, it's gone up way more than that, 10% in some cases, maybe more in certain pockets of the real estate market. So by owning that real estate, if you can get a payment that you can afford, don't worry about the interest rate. Worry about the long-term play of holding that house and letting the appreciation in the value be the thing that builds wealth. Your single biggest expense for the average person is their housing. If you're paying rent to somebody, you're paying off a mortgage, just not yours. So find a house that you can afford at the current mortgage rate and payment, and then if those rates go down, you'll be able to refinance into that lower rate, have your payment go even lower, and watch that appreciation stack up until you build wealth. So there you go. Keep the mortgage rates in perspective. The economists think that the interest rates will be coming down by the end of the year, and the Fed continues to work to lower inflation. Let's hope that they are successful. So thank you for joining us for our video today. Become a Borough Bro by subscribing to our Life in Murfreesboro YouTube page, and make sure you hit the notification bell so you don't miss any of our videos. Finally, if you're thinking of making a move to, from, or within Murfreesboro or anywhere in Middle Tennessee, give us a call. We'd love to help you make it happen. We love helping people achieve their real estate goals. In fact, that is our mission as a company, to help people just like you to achieve their real estate goals. So give us a call or a text or reach out on our real estate hotline, and I promise we will do everything in our power to make your journey to your real estate goal as easy and stress-free as possible.